Shankar Sharma is back. Last time when we interacted with Shankar Sharma on this forum, he was of the view that the worst for Indian markets is over. Rupee could be nearing the end of its decline, and it's time to load stocks. Shankar, morning. Thank you for joining us. Shankar, let's first start with the Reserve Bank of India action. Do you agree with the Reserve Bank of India's stance, the fact that they clearly have prioritized inflation over growth?
Yeah, in my view, the RBI's entire sort of policy has been very gross mismanagement of the economy, and it has compounded the government's problems. So, we were hoping that the RBI would see some sense and cut rates, but clearly it has not done so. But my sense is that it is inevitable. If not today, then, in the next meet, they will have to cut rates, and maybe they'll have to cut more aggressively than if they had cut. So, in that sense, I don't think it's an end game situation as far as the RBI's policy is concerned. The growth is sharply down, but on the other hand, in my view, inflation will also be down because of the lowering of commodity prices. So overall, I do suspect that the next RBI meet will hold far greater sort of good news for the markets as compared to what the expectations today are.
Now India will have a new president and a new finance minister. Do you think news flow is unlikely to improve and there are chances of a midterm poll which are very high?
No, in my view, I think, midterm polls are, not even on the horizon or on the radar. All those things are, largely sort of in the realms of speculation. So I wouldn't even, go there at all. I mean, my view is that, the government will want to bat out the entire innings and not declare midway. So irrespective of what happens on the finance minister, who becomes the finance minister, I don't think, you're looking at a situation of a midterm poll at all.
So Shankar, who's your choice for the new FM? P. Chidambaram or a bureaucrat like Montek Singh or Rangarajan?
Look, all those factors ultimately have a shelf life of maybe 24 hours, no more than that. So I really doubt if that in its own right will change the trend, for better or for worse. In my view, the choices that, in terms of the names we are hearing, are all quite okay. There's, so whether it's Montek Singh Ahluwalia or C. Rangarajan or P. Chidambaram or whatever, I mean, they're all of a certain category which the market generally won't have too much problem with. So I think the problem name might be Sushil Kumar Shinde if he were to become the finance minister. While he's had a good innings at Maharashtra as the finance minister, the markets have their own views on that. Other than that, I think most of the names seem quite acceptable to the marketplace.
Shankar, are you worried about the pace at which new investments in India is slowing down? And if it fails to recover, do you think Indian markets run the risk of a permanent derating?
Look, I've been saying this for quite a while now. I've said this from the middle of last year, that the RBI is really throwing India's growth story down the drain. In that time, we were growing 8.5%. It seems like a mirage, but that is what it was. And I said that to throw away growth is going to be disastrous for India, because it's very easy to break growth momentum, but it's very hard to recreate growth momentum. But the RBI in its wisdom kept tightening rates throughout last year, and we are suffering largely because of the RBI's sort of, in my view, very misplaced monetary policy. And secondarily, of course, we have a very terrible global macro situation. So almost no country that I can think of is having a good time. China's growth rates have virtually halved over the last, they were growing at about 13, 14%, 12%. Now they're looking at about about 7% to 8%, 7.5%. Ground reality suggests they're probably growing at 4 or 5%. Brazil and Russia are down to decimal points. Brazil is growing at 0.3%. Russia is less than 1%. Now obviously Europe and US, no need to even discuss them. So which country is growing? So why are we just thinking that India is the only country which is growing at a rate lower than what it was growing at in the last 3 or 4 years' time? The whole world is in a mess. In my view, we are in less of a mess than the rest of the world. But to say that India is the only country in a problem situation and there is a problem, crisis of confidence, there's a governance deficit, all rubbish. Ultimately, we are living in a global pond. The global pond is drying. We are going to dry along with that, but my view is that India will still be the last man standing in this whole game.
Shankar, at a time when there are bears everywhere, you're the only bull in the town. So what makes you so convinced that the worst for Indian markets is now behind us and it's time to load stocks?
Look, I mean, ultimately the world is a relative place, and nobody sort of operates in isolation. The fact of the matter is that our bullish view has been based, on India has been based primarily on a few counts. The first one of that being that commodity prices, which are sort of the bane of India's economy, India's macroeconomic picture, would sharply be down this year, and that this was a view that we have held from the beginning of the year, back in January or even late December 2011, when crude was 105, 110, and our view was that this year you would see $75, 65 to 75 on crude. So far the trade seems to be working out very well, because crude is already down to 82 or 83, far more than what probably sort of anybody expected. Commodity prices overall are sharply lower, food prices are lower, copper prices are lower. So all of that is actually very good news for India. And second reason for our bullishness was that gold imports would be also down this year, because the rupee has depreciated, gold prices haven't fallen much, so therefore gold prices in rupee terms are really sky high. That would put an automatic brake on gold imports. So when you have a lowering of the import, lowering of crude oil prices and lowering of imports of gold, both of them would be very good for the currency. So our view is that the rupee will be strengthening sharply against consensus to 44, 45, 46 in this year. And that in its own sense brings a huge slew of positive factors to the market. For one, inflation will be sharply lower because of that. FII flows will obviously strengthen, FDI flows will strengthen, because people will then be playing, sort of a chasing game that, hey, let me book in, my rupees at 52, 53, 54, 55, because it will strengthen to 45, 46. All those factors will come into play, and that will lead to this stock market doing a lot better than what any other market in the world is expected to do. More importantly, the market has pretty much recovered all its losses of May. I mean, it was about 17,000 or so prior to May. And it has more or less clawed back all the losses of May. And that tells you, how resilient this market has been, despite global markets having had a terrible time through late April and May and even the first half of June. Indian markets have been very resilient. So that is itself telling you India's outperformance in wake of a very bleak global market situation is telling me that there is a lot of relative strength to this market. That you will see translate into actual stock price gains, as the year progresses. So, I might be the only bull in town, but that's okay. I mean, there are several times when I have sat in a minority, and so that's really nothing new or nothing that is bothersome. But I do believe that the factors that we anticipate, like lower oil prices, lower gold prices, overall lowering of inflation, cutting of RBI rates, all of that will play out, and that will help the markets.
Okay, I just want to quickly see Reliance Communications, and the stock, on account of that Veritas report, did make a new, or rather a fresh low when it kick-started trade. Somewhat recovered from there, and it's currently down by about 3.5%. Still very far away from that 15 rupees per share price target that Veritas has actually downgraded the stock to. But yes, you are seeing some technical weakness actually trickling in on this one. 3.5% in the red. 63 levels is where Elcom is. Shankar, what is it that you like within the infrastructure space? Asset owners, builders, or cap good companies?
No, not really. We continue to like the sectors we have liked, and infra names is something we have been very bullish on from the beginning of the year, particularly stocks like Jayaprakash Industries or IVRCL or even Larsen & Toubro. And I think, they have done far better than what almost anybody anticipated. In Larsen & Toubro at whatever 1350, or Jayaprakash 72, 74, 75, 70. That's the kind of range it's been in lately. But remember, it was at about 45, 47 at the beginning of the year. So all those names have done really well, and we continue to like those names as a purely contrarian bet. We do think that the investment cycle, while it won't come back to the roaring first half of 2000, I think that it'll definitely improve from here on, even if just RBI were to play ball even to a sort of smallish extent. Other than that, all the rate sensitives like banks or autos again look quite okay. And in this current sell-off, they haven't been hurt much. So, that itself tells you there's enough relative strength. Consumption names is not as if we have said a log out of them. It's just that, Hindustan Lever is not going to give you a 30-40% kind of return that quickly. It's more an outperforming stock. So it typically tends to outperform a bear market. But if you have a bull market, it will tend to sort of lag that kind of, a big market upswing. So it's a good name to have, but don't have too much of Hindustan Lever or an ITC, because they can actually hurt you if the markets were to sort of have a rally of 25 or 30%, which I don't rule out for this year, by the way.
That's a fair point, Shankar, that for so far this year, HUL, ITC, these names have, they in fact have underperformed Indian markets. But Shankar, within the infra space, what do you like? Do you like asset owners, builders, capital good companies?
Look, we've had a great run, so every stock goes through a period when it doesn't do much. I mean, and I wouldn't be surprised if Tata Motors doesn't do much, or it just hovers between the 250, 300 kind of range for a while to come. When it was 300, it had doubled from the lows of this year. About 145, I think, was the low, and it went to 290, 300, 305. So that's a great return for a stock of that size. If it were to even tread water at 250, 260, 270 levels for the next 6 months, I wouldn't be losing any sleep over it. I mean, you can't expect large companies of this kind to keep doubling or keep giving 50% incrementally from, each level. And the fact is that, hey, global markets are very challenging for almost every goods or services. So to that extent, it's not impossible to say or implausible to believe that Tata Motors JLR numbers might not be what they were, 6 months back. So all those things factored, I think there's still plenty of juice left in the stock. But that said, it can just tread water for the next few months, right now. I don't think it's a sell just yet.
Shankar, you've been the most outspoken bear on Reliance Industries. The stock is underperforming despite the buyback program. Do you think this will continue as now the commodity prices as well are coming under pressure?
Yeah, I mean, there can be 100 reasons not to like Reliance, and I don't know why they are on the one hand buying back stock, and on the other hand they keep raising debt all the time. The two things just don't seem to make sense. And here is a company that is reportedly having, $10-15 billion of cash. Here's a company that is reportedly buying back stock. And here's a company that keeps raising debt. I just don't get this entire equation that if a company had so much cash, why on earth would it keep raising debt all the time? And then effectively using that debt to buy back stock. So something, doesn't add up here. And I have not been a big fan of Reliance for the last, year and a half. The stock has halved from its 1,600 odd prices. And I don't hold out much hope of this stock being the leader of any sort of market rally going out into the future for the next few months at least.
Shankar, final question, a hypothetical one. Let's imagine for a minute that exactly after 1 year we're having a same conversation on the similar forum. Where do you think markets or Indian markets will be? Do you think they will be at least 10% higher than where they are?
In my view, the Sensex could easily be higher by 25%, if not higher. Because I do believe the rupee would be trading at about 45 by then. I do believe oil will be trading at between 65 and 75 by then. Or if I even talk about a year, I would think you could easily get there between 6 months and 12 months time from today. So anytime in this period you are likely to see the rupee at 45, 46, oil at 65 to 75. Just these two factors are enough to take this market up 25-30% without any doubts. I would be very firm in my view that you are still likely to see a high in the Sensex by this year end, no matter how absurd that theory sounds. But I do believe that an all-time high or near about an all-time high is still very much on the cards for the stock market.